Nifemi, welcome to Powerland West Africa. So, off the back of the CBN's policy and decision to start to sell dollar to the BDCs, how did the market receive the almost double-digit appreciation that the naira has scored in the last 48 hours?
Okay, hi, good afternoon. Thank you for having me. So, just to piggyback on what you said, owing to the CBN circular that the sale to the BDCs will resume next week, so we've seen a lot of selling in the market. So what you're seeing is that rates have dropped significantly from as high as 470 from last week before the announcement was made to about 430 now. And I think that this trend is going to continue. I think that rates will still drop a bit lower and before they finally settle at a convenient rate. What rate it will settle at, I'm unsure at the moment, but what is for certain is that it will keep going down in anticipation of the resumption of the sales to the BDC. Also, as the CBN continues to intervene in the various windows we have, I mean, the SME, retail, and the INE markets, respectively, we'll see that the rates will keep coming down, so that there's a convergence to what is happening on the INE and what we have in the parallel market. I believe that's the goal at the end of the day. But we'll see how this continues to play out. It will be further going into next week when the actual sales start.
Of course. Now, seeing that conversations around the harmonization, convergence of FX rates across Nigeria's multiple windows have been ongoing for years now, to what extent or how would you say that the market is responding to this, to use the words from the trader there now, continuing convergence of the official rates? Is it as much as of a shock to the system as some traders say it is?
I mean, like you said, it's been a conversation that has been on for years now. So, before now, we had the CBN official rate back then that was at 305. We had the INE, we had the parallel market, and then we had the several rates at the auction. But now what is happening is all those rates are now closely towards 386, 387 on all the windows. So I don't think it should be much of a shock. The reason why the parallel market went as high as it did was because of the pandemic and the speculations and, of the impending depreciation that everybody had. So the demand went higher than normal. But once the CBN starts to ease that space and start to sell to the BDC, again, they stopped selling because they were not traveled. But once they start selling and the supply is flowing into the market, the rate should come down and we should be near the convergence that we've always been speaking about. I don't think it's much of a shock to the market because if you take out the parallel market, the other markets are already close to one another. The INE is, I think, at 386, 385 yesterday. The NFX closed at 385.7. The CBN official is almost at 380, and the SME and invisibles at 383. So the rates are already close. They're already close knitted, except for the parallel market. And I'm sure that's part of why the CBN is taking these steps to ensure that the parallel market also comes in line with the other rates. It isn't much of a shock to the market. I think what will be much shocking is if we left things as they are. Parallel market is close to 500, while the other rates are at 380 levels. So I think this is expected, and then we'll see how it plays out.
Okay, so day 3 now of activities, of trading activities for the week. How is the fixed income market trading so far? Where are investors seeing more interest within the available instruments?
So the fixed income market hasn't, nothing much has changed in that space. The rates are still not as attractive as they ought to be or as people want them to be. But for this month, we have a very large maturity. We have over 1 trillion maturing in OMO bills this month. But I think tomorrow we have about 382 billion maturing. For the entire month, about 1.2 trillion. So you have those monies chasing alternative investment sources. I think that, since the Treasury bills rates are around 3 levels, I think what I'm expecting is that most of the monies go to the bond side. So you will see that the bond rates also start to go up and on that end. So that's what I think would happen. I think people will reinvest in bonds and other securities that are available. But the Treasury bills and bonds market at the moment, there's a bit of buying, but not much. Nothing significant has changed the market until we see that influx of liquidity. And then you have people looking for alternatives to put their money in. So they will probably drag the rates in the bond market up, given that the Treasury bills market is not as attractive. And then for the money market, the general money market, there's liquidity in the system this week. Yes, please. Hello?
Go ahead, go ahead. I was going to
Hello?
wrap that conversation on that note. We are fast running out of
Sorry, I
time,
thought
but
I
just
lost
go
you
ahead
for
and
a second.
bring us up to speed on
Okay, so
money
I just
market
wanted to give an
activities.
update on the money market. Liquidity is still about 250 billion. So rates in that space are about 5.7 to 6%. Also, given the OMO maturity we're going to have, we don't know how much people will go for the OMO auction if there is one. So rates in the money market should also come down, given the liquidity, the level of liquidity in the system for the week. It's a pretty liquid week for the money market.
Always a pleasure to have you share your expertise with us on the show.
Thank you
Nifemi
so much.
Adeniyi
Thank you so
is
much
the
for
team
having
lead
me.
of liquidity management at Access Bank.